Over the course of the last day and a half, you've heard from investors, you've heard from media, you've heard from analysts, you've heard from operators, you've heard from economists, you've heard from brand consultancy, you've heard from a motor company, car company, you've heard from many different facets of the industry, what's going on either in the industry or in the business landscape in general. This session is obviously intended to provide a very sharp focus on what's on the minds of the CEOs who are leading some of the largest companies in the industry. It's my pleasure to be able to introduce Arthur de Haast. Arthur is the global chairman of hotel and hospitality at JLL, who's going to be moderating the session. Arthur?
Good morning, everybody. Great to be back here at IHIF, and we've only got 45 minutes, so we haven't got a lot of time, and we've got some very opinionated and successful individuals who I'm sure will want to get their messages across. So they're here representing around 20,000 hotels in total across their 5 organizations, so speaking for a very significant proportion of the global hotel industry. And what I was particularly pleased about with this panel was that they come from very different perspectives. So first up we have Arne Sorensen, CEO of Marriott. I'm not going to, but Marriott, of course, were one of the first proponents of the asset-light model, and of course a huge public company now, operating both in the brand management and of course a significant franchisor in particularly in the US. Second up, we have Gerald Lawless of Jumeirah Hotels, a very different organization, smaller, but already an iconic brand. Who would have thought 10, 15 years ago there would have been a brand coming out of the Middle East that was going to start to play a role in the global hotel industry? So, more of a started out as an owner-operator model, but now moving very much into the management space. Third up, we have David Kong, from President and CEO of Best Western, another very different operating model, of course, representing the private owner, mostly the mid-market hotels, but spreading your brands up and down from that, and providing reservation systems and primarily a brand identity for individually owned hotels. So again, a very different model. Then we have Steve Joyce, President and CEO of Choice Hotels International, and of course Steve's Choice, the biggest franchisor in the world, so primarily a pure franchise model. And then last, but by certainly no means least, Sébastien Bazin, Chairman and CEO of Accor, a company that is going, I think it's fair to say, through a fair amount of change at the moment, and both a significant owner of assets, significant leased portfolio, as well as managed portfolio. So, as I said, a very diverse group who've got a lot of different perspectives that we can certainly look forward to listening to. Thank you, Sébastien. Hospitality right to the right to the core. Okay. So, gentlemen, we've heard this morning and yesterday afternoon about how positive everything is. I mean, most of you, I think all of you, have posted record results in 2014. I think the Dow was at a record number last night. The NASDAQ hit 5,000 first time since the 1990s. Life is really good. So what does 2015 look like? Just better? Arnie, you want to give us your first thoughts?
Let's just savor it. Why ask the question? Enjoy it.
Enjoy it.
Obviously, 2014 was a spectacular year. It'd be great to repeat it over and over again for forever, essentially. I suspect 2015, though, will be even better. I think you look at the U.S. economy, which is still obviously a big part of our business, and you see an economy that, if anything, is building momentum as the year went along. The stock market's moving, I think, because of that. You look at the rest of the world, a bit more optimism in Europe, I would say, today than a year ago, albeit still weaker than the optimism we have for the United States. And then you look at the rest of the world, you see renewed optimism in places like India, a little more guarded view about China and other places. But I think all in all, we'll see another strong year of RevPAR growth around the world.
David, you're representing a lot of smaller entrepreneurs owning, one or a few hotels. What's their perspective on the globe at the moment? I mean, the global market.
Well, I totally agree with Arnie. I think if you look at, especially the United States, where we have a slow but steady recovery in the economy, which has sustaining power, and the fact that supply hasn't been a problem because money was really tight for a long time. So we have demand exceeding supply at this time, and we're reaching a historic high in occupancy level. And you just heard earlier, interest rate is about 2.5%, and money is quite easy. So that bodes well for the hotel industry in the United States and around the world. Aside from places like China and India, to a certain extent, is very challenged as well. And some parts of South America and some parts of Africa, everything looks great.
Mm-hmm. And Steve, surely there must be something out there that keeps you up at night that you worry about, or is it all just looking fantastic?
Well, there is one primary factor, and that is one of us, according to plan over the last 2 years, one of the CEOs sitting on this panel is not going to be here next year, so I'm not quite sure. I'm not sure this is at all a wise approach, but
I volunteer to that.
Coincidence? I think not. No. So, no. I mean, there's individual pockets. I think it is more of the black swan event that's more concerning. So, if Russia goes, more negative and starts causing concern, if obviously a major terrorist interruption, I think less impactful now than probably ever. And so, but when we look at the cycle, not only are we in a great spot, but we think we're sort of in the middle of the game. We still think there's, if you look at whether it's the US or you look at Europe, there's really, supply increases are still well below, demand is still outpacing it. And so there's clearly some momentum building on the supply side, particularly in the States. But it is a very positive point in the cycle. And for our company, which operates more in the upscale to upper budget categories, we are just hitting the sweet spot, because now not only are the urban markets getting it, but some of the secondary and tertiary cities are seeing it. Lower gas prices is having a very positive impact for us. There's some net from the oil fields themselves, but it's really slow. It's not dropping, it's just slowing the rate of growth. And so we're sort of with Arnie in that we had a very positive year in 14, but we think 15 could certainly be stronger. It certainly has started out that way. And as a result, we finished the year at some pretty record levels of RevPAR growth, particularly in the States, but even Europe, I think, is starting to show some stabilization. And then, a lot of the smart real estate folks that we work with in the States are starting to look at Europe, which usually is a good sign that while things may be slower, they're still going in the right direction. So we're pretty bullish about the overall industry. We're focused more on Europe than we are in Asia, for example, but we think this run is good for several more years at least.
Okay. Gerald, Dubai. I mean, that's where you've got the most rooms, 20% plus supply on the horizon, the Russian market going soft, Is it a challenge or?
Yeah, it's a challenge, but I'm usually accused of being too optimistic. But generally, especially in relation to Dubai, I've been right. And I think if you look at the increase in supply and how we continue to cope with this, mainly through the airlift that we have through Emirates Airlines, bringing some great tourism from different markets into Dubai, growing markets when you see a place like Russia going soft because of the ruble, and at the same time seeing China growing at an incredible rate. And we continue to say our occupancy levels aren't going up dramatically, but when you're trading at between 82 and 85% on an annualized basis anyway, at average room rates that are usually north of $600, I think you can say that small growth is still very welcome and a very good performance. And that has continued. I mean, we're looking in Dubai of going from approximately 82,000 keys at the moment, or say between serviced apartments and hotels, to ultimately probably as high as 150,000 by 2020 when the World Expo starts. And how are we going to fill it and keep that supply going in the meantime? And yes, it comes through airlift, but also there's a lot of work being done in a place like Dubai to develop theme parks and to give people different reasons to continue coming into a destination. I think for our company, the way we're so strongly based with great locations and pretty matured businesses, we can continue to sustain that. And the biggest problem, the biggest challenge I would say we have is very much what we were just talking about, is the geopolitical challenges. The challenges of a weak euro in terms of buying into a dollar-based currency will obviously be quite difficult. The ruble, we need to see something happening with that pretty soon. On the other side, we're now developing hotels and have hotels in Europe, so we're looking forward to places like Rome and Mallorca in Spain having a very strong summer, particularly from the United States and indeed from the Middle East, where so many of the currencies are based in dollars. So I think it's pretty steady as she goes, and that we will continue to evolve and develop. I mean, if you look at the number of visitors we have in Dubai, at almost 13 million visitors in a city of 2.2 million people, it's not a bad performance. And I was just looking recently that there's approximately 24 million international visitors into China for a country of nearly 2 billion or 1.5 billion.
Good that you mentioned China, because I wanted
Arthur,
to...
just a second. Did you say going from 80,000 rooms to 150,000 rooms in 5 years in Dubai?
Potentially, yes. And
70,000 rooms opening
yes,
in the next 5 years.
Yes, doubling what we have. That is, well, when His Highness Sheikh Mohammed proclaimed that we wanted to have 20 million visitors by 2020, that was about 3 years ago. We had 10 million visitors. Today we've had over 13 million visitors. And as you know, not to keep talking about Dubai, but Dubai Airport is now the busiest international airport in the world and has surpassed Heathrow.
Just continuing on this, you mentioned China there and the number of international visitors to China. I mean, the global supply pipeline is now at a record level, according to STR. I think it's just over 1.3 million rooms now in the pipeline. Something over 300,000 of those are in China. You were in China last week, Sebastian. You've just announced a big agreement there with Huazhu and the China Lodging. Sure. Yeah, what's your perspective? You know, there's a lot of concern, I think, around the China supply situation, and how are you seeing things in China, and why did you make that strategic move into the market in that way?
Well, because everything I do start with a diagnosis, which is basically what I learned from private equity, and I was actually very, very happy to hear Barry before. China, and I was in Colony for 17 years, I've been going to China 2 or 3 times a year for 15 years. And 10 years ago, China Lodging, Xinjiang, 7 days in Homin virtually did not exist. I.e., the biggest international operator in China, was the biggest operator in China, happened to be international chain, whether it was Hilton, Intercontinental, Marriott, Accor, the world. Now, number 1, number 2, number 3, number 4 are Chinese. They started with the economic hotels. They're growing between 300 to 500 new hotels per year for each chain, where each of us has been growing between 30 and 40 hotels maximum. And they have different standards, different securities, different legislation. Started with the economic hotel. They're moving for the last couple of years to the mid-scale segment. Are they going to go to the upscale segment? I don't know. What I know, what Accor is very good, which is the economic mid-scale, they're eating my lunch. We've been there for 35 years. Accor lost money for 20 years in a row. We finally made money the last 15 years. I believe, let's not compete with those guys. I also believe don't get out of China, because that's going to be the largest emitting market in the world, probably in 2 or 3 years from today. You need to be there, you need to be visible, you need your brand to exist, then you need to partner. Then the decision is with whom. So I've met with the 4 Chinese operators, spent the time, decided to opt for one, and the decision was that I guess whatever I had in China on economic mid-scale is transferred over to this Chinese group against 10% of his listed entity. I myself becoming a board member. He committed to open 400 new Ibis Novotel Mercure in China over the next 4 years. And let's hope he's going to do it. And I'm connecting his 30 million cardholders with mine 20 million cardholders. And that's going to be probably win-win for him and for me. But going on my own, in terms of actually continuing developing, was a recipe for disaster.
Arnie, you just closed on acquiring Delta Hotels in Canada. You've been, not so long ago, acquired Protea in Africa, completely transformed your positioning in the African market. So are you going to buy a Chinese brand and completely transform your position in China? Is that on the agenda, perhaps?
Never say never, but I think the way we're growing in China is fabulous. I take Sebastian's point. I think the holy grail, of course, for China is, can we go from having a few hundred hotels, each of us, to having a few thousand hotels? And without partnering with one of these big Chinese lodging companies, I'm not sure whether or not that will be achieved. So Accor's done one, Hilton has done one. We've looked at a few. We want to make sure that we grow and can be profitable in the way we grow. And so some of these deals, the fees to us were so skinny that we thought we're actually better off waiting for a while and seeing whether or not the growth that we're pursuing now, which is always with Chinese partners. We haven't built a single hotel in China. Always with Chinese partners. Will they grow with us in the Courtyard or AC Hotel space or Fairfield or Moxie someplace else? And we're still hopeful that that will come to pass. I think with the conversation about a bit more modest expectations for the Chinese economy, I think we can marry with that the notion that in our industry, the Chinese shift towards a consumer economy and encouragement of travel should make the lodging business and travel business broadly a much better performing industry than the average Chinese industry will be. And so I think we'll have lots of opportunities there. I wouldn't guess we'll go in and buy something. And you haven't bought anything, I don't think, right? You've partnered with somebody that's there. But we'll see. A lot of years ahead of us.
So Steve, you must have many thousands of hotels in your pipeline. I mean, we know that there's a lot of liquidity out there, plenty of money to invest. I mean, can the industry keep growing at the pace that it is by working with, basically sort of individual entrepreneurs, maybe a few REITs and so on, who might put 5 or 10 hotels into the pipeline? But it seems a very laborious and fragmented model. Can we keep this pace up with this approach?
Well, I think the short answer is yes. So, and it is a variety of partners that we're dealing with. So the folks that we're doing some of the upscale efforts we've got around Ascend or Cambria Hotel and Suites are different than our core franchisee, who tend to be smaller family organization that may do 2 or 3 hotels. But all of them are very optimistic about the next several years. So we did probably something on the order of globally 700 some deals last year. Now there's a heavy production in the United States. We did close to 600 deals. We'll do more than that. And the United States is sort of getting back to those peak levels. New construction is gearing up significantly. And depending on which category you're playing in, we're dealing with different capital partners. But we're also finding a lot of folks that haven't traditionally been investing in what is our core business in that upscale space down to that really lower moderate tier. You've got new institutional investors who are playing. You've got the creation of several different investment vehicles that are looking for product. You've got a lot of money looking for placement. And so one of those interesting challenges we've got is trying to have enough product to fulfill that demand. And then as we see in Europe, we're actually changing our strategy a little bit. We're kind of the ultimate asset light positioning, but we are doing significant levels of investment in opportunities for multi-unit type product, particularly in key gateway cities. So we're in a number of those dialogues now, but it's hard not to be pretty optimistic that not only is the business there, but there's the capital and the partners that are looking for different types of opportunities. And I would say, having been around this business for a long time, you've never seen, everybody always wanted to do luxury and upscale, but the levels of interest in sort of more of a broader spectrum of the lodging portfolio probably has never been higher. And so as a result, for a company like mine, it gives us some opportunities we probably haven't had before.
Yeah. So Gerald, you've got some huge global companies here. How do you convince an owner in China or in Turkey? You've just opened a new hotel in Turkey. How do you convince them to work with Jumeirah?
If this group represents 220,000 rooms, then Jumeirah proudly represents 0.01% of that, so we're very happy about that.
On the other
But-
hand, it would take 7 of my customers to pay one of your room rates. So
Thank you so much, Steve.
I like that a lot.
I take that as a great compliment. But actually in China we have, in addition to the one hotel that we have, no one to just overemphasize in China, but we have 8 very real projects coming up in China. And yes, they're all at the luxury end of the scale. And yes, there is a lot of concern about oversupply in China. And yet I mentioned earlier that only approximately 22, 23 million international visitors go into China. This is not counting Hong Kong, which actually skews all the Chinese numbers. But we only get that level into China, and yet Dubai can do something like 13 million visitors a year. So I think, and it's a lot of work that Arnie has been involved in as well with the World Travel and Tourism Council and the World Economic Forum, to really continue to encourage the facilitation of travel through the issuing of visas on an intelligent basis through an electronic platform, a platform that actually will make it better from a security point of view and at the same time encourage people to travel. And I can't really understand why, for example, take China, that they introduce a system where you can get a business visa for 72 hours. Well, if I'm good enough for 72 hours, why can't I be good enough for a week, make it 2 weeks? So from that point of view, I think that within the industry, we need to encourage governments around the world to really swallow their national pride, understand that if a country wants business from Europe and Europe doesn't want business in terms of tourism from them, then allow the Europeans to have visas to get in. And I think that would help a lot, especially at the luxury end of the business, to start putting a lot more occupancy into hotels in places like Shanghai, for example, which is well over-hoteled and oversupplied. And I totally agree as well that China is definitely going to come back, and it is well worthwhile waiting for it, even with, 6.5%, 7% GDP growth at the moment, and we're all down in the dumps about that. But as we heard earlier this morning from Andrew, that's not a bad place to be in a country as big as China, plus a huge domestic market.
Can I amplify something Gerald just said? This is a group of lodging leaders here that probably are European-centric, but have businesses all around the world. We are at a fabulous golden age of travel with hundreds of millions of new travelers from China and India and Sub-Saharan Africa and Latin America. And when you look at the risks, Steve mentioned the geopolitical risks. The risks are not so much the event as it is the reaction of countries to those events. Which is that any country can erect bigger borders today to make inbound travel that much more difficult because the pro-security voices can always say the tightest security is to let nobody in. And that kind of action by country after country will defeat, really, the power of this travel trend. And so collectively, we've got to make sure that we are using our voices, using our ears, to see what's happening in the countries that we do business, and saying, as Gerald's just referenced, we can actually have freedom to move, freedom to travel, and better security if we use the data that we've got, as opposed to this archaic approach that hasn't changed for hundreds of years. And so all of us ought to make sure we're working together on that.
And even in the situation of unintended consequences, like in South Africa, where the minister decided, I think for welfare for interior, that to stop human trafficking of children, visitors coming into South Africa now need to have a full birth certificate for their children under 18 in English.
Original.
Original and in English. And then they were going to change it and review it, and now they've decided, no, it's still going to be that way. And I feel sorry for the travel trade and the hotel trade in South Africa, because now, why make it so difficult? So again, using the electronic visa systems that we're trying to advocate around the world would be far better for security and to stop this kind of awful trafficking worldwide.
David, we've heard earlier today, the need for brands to be more authentic, local. Now, Best Western has an interesting profile in that you're global, yet your owners and your assets are very local. Is that an opportunity for you?
Well, definitely. I think people are looking for experiences when they travel. And especially today's travelers, not just millennials, I think they're looking for an experience. And so I think anytime you can inject the personality and character of the brand into the hotel experience, you come out ahead. And I think for that matter, many of us actually have just launched a lifestyle brand. And in our case, we are looking to provide the customers that stylish experience, but on top of it, those selfie moments. And one of the things that we set out to do when I became CEO was to focus on customer care. And I think that's one aspect of the hospitality industry that we need to think about all the time.
Let's turn now and talk about something that's also very uppermost in a lot of people's minds, the whole thing around technology, distribution, and where that's all going. I mean, Sebastian, you've just announced a huge program to invest. I know everybody's investing heavily in this area, but you've just announced a big program. Can you possibly spend enough money to keep up with this pace of change against all those other players out there, the ATO, online travel agencies and so on?
Well, it depends how you define possibly. We have the benefit of traffic. We, Accor, have 40 million customers now a year in the system who've been there for a long, long time. We have the technology in terms of following them up, tracking them up, and getting all the booking engine, PMS and CRS and others. We need to invest more in what we did not do before, and in a very simple terms, which I've said kind of actually in November in London, is we now decided that I guess we have to be with the customer even if he never visits an Accor hotel. That is a total change of mindset. Because what we've been doing for the last 50 years is we've been preoccupied with the customer when he gets into the hotel door, and we're happy when he leaves the hotel door. So that was 90% of our focus is the service within the premises. What we're saying is in digital world, you have to be in a customer top of mind from the very first day he's going to get on his computer, whether it's smartphone, whether it's a tablet, whatever you name it. Which means that I guess when you start dreaming about traveling, be there. Then that's step number one. Step number two is going to select a country, a segment, a brand, an experience. You need to be on a select brick. Then it's going to be booking. You need to be on booking. Then it's going to be preparing for his plan, i.e. aggregating the airline, the Europe car company, the hotel chain, the museum, the restaurant. And then you're going to be on the stay. Then it's going to be on sharing his experience, which is TripAdvisor. And then it's going to be returning. The hotel industry has been focusing on the book, which is brick number 3, and on the stay, brick number 5, and on return, brick number 7, which is the return. We need to be on the dream. We need to be on the select. We need to be on the book. We need to be on the prepare. I.e., you need to be top of mind. We need to accept that I guess you need to get a lot of visitors, which can be prospect and maybe not consumers, which is basically what all the Amazon of the world have been understanding for a long, long time. You aggregate together a number of people, and you hope that those guys are going to be converting into your brand. So if you want to be in those different 7 bricks, you'd better invest in each of the 7 bricks, either by becoming a leader in each brick or either by partnering and getting alliance with somebody already good in one of those bricks. So it's called customer journey, top of mind, be there. And you don't have any other choice.
Steve.
So we've actually, the business has changed so dramatically over the last 10, 12 years that we actually view ourselves as a brand and a technology company. And we have more folks dedicated in our company to technology than we do to the brands and the operations. So we think it's an opportunity, but it's also a huge threat for those that don't react. You know, we've got a scenario where we were first with the iPhone. We were first. We did a deal with Ford where you can book a room at Choice Hotels without taking the hands off your steering wheel. You can book a hotel room at Choice on your phone in 3 clicks. And we're still totally paranoid about what comes next. So it is an environment. We won't hire anybody that hasn't been in the space the last 3 months because they're irrelevant. That's how quickly this whole thing turns over. We're spending enormous amounts of money both on the actual logistics of mobile, because that's actually more than half of our e-business at this point, as well as, though, and Marriott's doing a great job of this, is content. Because if you don't capture the hearts and mind, to Sebastian's point, you're not going to hold them anyway. So, but this environment creates an opportunity for us to, there was someone referencing, why don't we take our inventory back? This is an opportunity for us to do that. Some of us have deeper relationships or more business coming from the OTAs than others. But the reality is this is a clear opportunity for us to be able to invest in a way that puts us on equal footing at least, and maybe a little better because we own the customer in the first place, than some of the other people that are trying to put themselves between us and our customer. And we're never going to match their advertising spending, right? We're not going to spend whatever billion they're spending. So that's not going to work. But what we can do is create content and a connectivity to that consumer through technology advancements, which actually, I don't even actually view them as proprietary. I view them as we should be looking at uniform systems across the lodging companies. We, in fact, took one of our systems and are now hopefully selling it to lots of other companies, both individual hotels as well as brand companies. We just announced that G6 is going to be a major player with us. So we think it's a unique opportunity for hotel companies in particular to actually go on offense and maybe take some of that positioning back that we sort of let happen passively.
Arnie, I mean, you have tens of millions of people staying in your hotels every year. You must have mountains of data.
I agree with everything Sebastian and Steve have said about the importance of investing in technology and lengthening our relationship or broadening our relationship well before arrival and well after stay. I think there's something else which is really fundamental, and that is to make sure customers get real value from booking directly with us or being members of our rewards program. Till recently, the only difference between a reservation on an OTA and a reservation through Marriott.com or anybrand.com was you would get points, rewards points, if you booked through brand.com, and you wouldn't if you went through the OTAs. The OTAs, of course, are trying to build their own loyalty program, so how significant that difference is something that we have to keep in mind. But so how do we build more value for them? We announced in late last year, effective in January, that wireless would be free to all Marriott Rewards members who book through our direct channels. Obviously, there are voices, particularly in the youngest travelers, who say it should be free to everybody. Wireless is like air, and it is. You know, none of us likes to pay for it. On the other hand, here was a very simple value proposition to say it costs you nothing to join the rewards program. Join it, book direct. Here you'll get a incremental value. And I think we can do the same thing around other aspects of the stay that we have with our guests. Do you have different cancellation windows that are more forgiving, for example, with your rewards members? Do you have other attributes of that stay, which are member-only offers, in effect, so that the customers who are coming to us through the channels that are least expensive, who we have the most information about, can in fact be truly loyal to us and receive benefit from them. And so I think in addition to all the technology spending we've got to do, we have got to make sure that customers know, you know what, it's in my interest to come and book directly through you.
David, is the TripAdvisor ranking more important to the consumer now than the brand?
I think it's very important because it's a third-party ranking. It's not the brand's ranking. And I know Accor was the first hotel company to sign with TripAdvisor. We're the first in North America to sign with them to feature their reviews on our website. And we have observed that the conversion rate is higher as a result of that partnership. It's not like we just siphon the traffic over to them. We open up a window and show the review if people are interested in looking at it. And our thinking is, why people are going to check TripAdvisor reviews anyway? I think their stats is like 3/4 of the people look at that before they make a booking. So why not keep them on our website? If they want to do that, they can do that on our website. And that has improved our conversion rate.
See, we did take a different tact.
Yeah.
We put our own reviews up, unfiltered, with a deep pause and a little concern about what might get put up, but it actually has worked out extraordinarily well. We saw the same lift in conversion. Mm-hmm. So, look, TripAdvisor is an important partner. There's no question people are going to look to them for ratings as well. We were the first to sign up with them on their booking engine. So we understand the power they've got, but we actually think it should be our consumers that we can verify stayed in the product and that actually did a real review, and we saw the same lift. We saw conversion lift, and we saw additional revenues, and we saw fewer people leaving our site as a result of doing our own reviews versus versus posting
Yeah,
TripAdvisors.
I agree with you, Steve. And I think over some time, as the different brands establish critical mass in terms of number of reviews, if there are hundreds of reviews on a website about a hotel, about one hotel, I think that's credible. But if there are only 10, it means nothing. And TripAdvisor brings that critical mass at the point when we establish a relationship with them. But today, all of us are collecting lots of reviews. And I think another thing that's good about these reviews is it forces our hotels to be better, because they know that if it's not 3.5 or 4 stars and it's not the TripAdvisor Certificate of Excellence winner, they risk losing that traffic to a reservation. So I think it has a very beneficial effect on our organization.
I think technology obviously is really important in terms of how we own our customer and continuing to bring them in directly into our businesses and then know what they're doing and what they want. But I also believe that technology generally, if it's not helping to personalize better the customer experience, if it's not there to give more choice to the customer, it's obviously not really working for them either. And I believe, for example, in a luxury corporate hotel, there's no reason why if a customer wants to check in remotely that he or she shouldn't be able to do so. And that doesn't in any way degenerate what the hotel is doing or take from what the hotel is actually doing in terms of luxury delivery or personalized service. That's the choice the guest wants. And I think we're going to continue developing and continue investing in technology. We've had over almost 10 million hits on our website last year. So for a small company with just about over 5,000 rooms, that's quite a number of people actually hitting on us to see what we're about. What we really now need to do is get intelligent enough and clever enough to be able to convert and make it very easy, as we were saying, to make these customers actually book our hotels directly through that website.
Yes, I'm just going to say the obvious, because I guess as critical as it is to have the reviews from the clients, what's even more critical is to have the general manager looking at the reviews, i.e. changing the incentive upon which you remunerate the general manager and his team so that they do pay attention 24/7 and responding. And that is also a shift of basically operating metrics for, they've been for a long time basically incentivized on margins, on cost, on bottom line numbers. Well, now half of it has to be reviewed. Does not matter whether it's TripAdvisors or our own clients. But that's something which is critical.
I think that was the point you were making, David, that it's getting people to focus back on the customer, improving
And you show them how they can improve their
rating. And it's real-time sort of feedback within hours, if not minutes. In some cases, they're putting their reviews on.
Well, because if you don't, then you lose the advantage, right?
Yeah.
If you have a review at that clearly needs to be reacted to and they don't.
Yeah.
So what we do is general managers have a specified time period. If they don't do it, we step in and do it for them. And then we find the GM. So, so our guys are taking more significant notice of those reviews and working with them, whether they're on our verified review site or whether on TripAdvisor. But you got it. But if you leave it sitting out there, it is bad. It's bad news.
Arnie, is Airbnb having any impact on performance in any of the major markets that you operate in, New York, London, wherever?
Hard to tell. Probably not. At least not so significant that in a rising demand market it shows in our performance numbers. You think about United States particularly. We started posting new record occupancy numbers a couple of years ago, and we continue to improve year on year. So even as Airbnb has grown its units substantially, we are posting these record occupancy numbers, and we're getting good pricing power. So there's certainly enough demand to satisfy all of us. I think to date, Airbnb has been clearly a primarily leisure play. It has been also usually at a lower value. And I think the good in that is that it's bringing new travelers into the marketplace. So I think if anything, Airbnb is expanding the pie for all of us. Over time, obviously, the paper today, they're talking about a new $20 billion valuation, fundraising valuation for that company. They will have pressure to make more and more money. They will have a temptation to try and get into the business travel space. While I don't think that they've had a significant impact so far, we certainly are watching it.
Could you see a scenario where you would work with them, Sebastian?
Many scenarios. I would work, you know, as much as I can be tough on many people, I would work with everyone. I'm going to be combating the level of commissions we are. I guess we've been getting in a lawsuit with Booking kind of actually 2 weeks ago. Why? I mean, I'm still very friendly with Booking. I'm just saying there is a cost at which no one could pay a commission for bringing a customer into our system. It's just unbearable and exorbitant. So we just have to basically face it, and we have to basically find a common solution for them and for us. And we'll find it. I guess I'm sure we're going to be. But for Airbnb, yes, it is insignificant today for us as well. I think it's going to be becoming more significant. The one thing I'm debating, which is on Arnie's point, which is something I have to accept, so I guess I'm not bitter about it at all. It's just saying that I guess all the new digital players are today being valued on gross volume traffic and not on bottom line numbers. And the more they grow, the more they acquire a company, the more they're going to go in valuation for 40 billion plus for Uber and 20 billion plus. The old traditional companies will still all being valued on bottom line profit and multiple. So we are at a disadvantage in terms of being as audacious, courageous, because the market will not accept it to be bold for volume and growth only. And that is a mismatch in between what they can do and what we cannot do. That's fine, let's accept it. Let's make sure that we focus on business, but we just have to adapt, and we have to talk more to the financial market. Would they allow us also to make some initiatives into the digital world, which are going to be paying off in 3 years and not tomorrow morning? I need to convince my investor base that is the case.
And I agree with Arnie's description of their positioning currently. They are big with millennials. And, you know, shared economies are going to be here. And so, but my view is there are parts of that business that are attractive. We're never going to rent couches. But there are parts of that business that are attractive that we should be in. Those guys were selling T-shirts before they did this. So, you know, this is something the hotel business ought to be looking at to the extent that it's relevant for our customer set or the customer set coming up. They got to, you know, I think they're going to go through a lot of transitions. They're going to have to play by the same rules we do. You know, they're going to have to pay taxes. They're going to have to provide for life safety. They're going to have to do lots of things, which is much tougher in their model. But they've got some very astute hoteliers associated with them now. They've got serious capital behind them. And the reality is, you know, the market loves it. You look at HomeAway's valuation. I mean, you know, there is money being made that is associated with our business that we ought to be participating in. And so we're looking at lots of different ways to do that. There's a lot of that business that doesn't work for us, but there is some that probably does. And longer term, that model is going to be a player in the industry.
I agree. I think we've got to accept they're here to stay. And what we need to do is to level the playing field. And I think we've been quite successful with that around the world in ensuring that fire, life and safety is applied within these buildings. Taxes are paid like anybody else, like we have to pay. And that they have to pay the proper wages and look after the cleaning people and everything. But they are definitely here. And I think that it's time to start registering hotel B&B. I think it is something that is coming as well.
Well, and to Sebastian's point, if they're going to move customers in our rooms at a 10% price point, I'm all in.
Exactly.
Okay, well, we're running out of time. I know that the whole session is running late because we started a bit late. Coffee is about to be served, so I don't want to keep anybody from that. So I'd like to just, clearly what's changed since last year, things have got a lot even better. It looks like they're going to continue on a very positive note for 2015. There are clearly some challenges out there. Some worries about geopolitical disruption and the constant challenge of the competition. But I'd like to thank the panel very much for their participation, and go and enjoy your coffee. Thank you very much. Thanks.